Today, I want to talk about how another hedge fund has just collapsed. I also want to explain why many more funds will collapse over the coming months due to how heavily over-leveraged they are. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, the ape Jeremy from Utah tweeted saying breaking news. A hedge fund owned by a former Goldman Sachs co-chairman has just gone belly up. And he said, great read, step right up, because who's next? This article starts saying kohrs plans to shut hedge fund and return remaining capital to investors. It says John kohrs will shutter the hedge fund he started after the collapse of MF Global Holdings, marking the end of his bid to rebound from one of the largest bankruptcies in US history. According to the SEC website, his master fund still had gross assets of around $510 million, including leverage, at the end of last year. So I tried to find how much this fund was worth at its peak, but I couldn't find any information. Although what I did find is his fund was trading with an unusual exemption. John kohrs fund had a futures exemption that very few funds out there have. Clearly somebody was trying to help him make back that money. But he said, I've decided to wind down the opportunity fund and return capital to my investors. As it says here, in July, 3 futures industry executives asked the CFTC to review an exemption that allowed kohrs to continue trading a small amount of futures. The executives claimed that kohrs is no longer eligible for the exemption because of a 2020 rule change. And now all of a sudden, now he's been found out to have this weird exemption, he seemingly had to close his fund. Or maybe after they took that exemption away, he ended up losing all of the fund and has now decided to close. Either way, it's just another one of these risky funds biting the dust due to having a significant amount of leverage. And speaking of those weird funds with tons and tons of leverage, let's talk about Troluce Capital, but also Citadel Securities. So you may remember I touched on Troluce Capital a few days ago, that was founded in January 2021, right around the GameStop run-up, and has only 5 employees, but yet has hundreds of millions of dollars worth of AMC puts. It's also incorporated in the back end of nowhere in an abandoned office in Puerto Rico. But Boss Bunch tweeted saying 5 people have $2.1 billion invested in Troluce Capital. And of that $2.1 billion, over 20% of their entire position is short AMC. He said it's as if these 5 people are desperate to win big or lose big in this endeavour. As Boss Blunts previously tweeted, he said it seems they were created to hold a large bag of bad short bets to save a major hedge fund or family office. Their website has 0 pages, their LinkedIn has 16 followers, and it's in the back end of nowhere in an abandoned office in Puerto Rico. This Troluce Capital seems to be getting sketchier and sketchier by the day. But let's also talk about Citadel and actually just how large their leveraged bet is. McSqueeze of the Cow tweeted saying Citadel must be in a bad place to collateralize $55 billion of their $63 billion in assets to counterparties to secure their debt and loans. He said should they default, counterparties can seize their pledged assets and sell or repledge themselves. We know Citadel has $63 billion of assets or of equity and has over $250 billion worth of stocks due to their significantly leveraged position. But also as of December 31st, securities owned of approximately $54 billion have been pledged as collateral. And as Investopedia says, should the borrower default, the lender has the legal recourse to take ownership of the assets pledged. Citadel has a massive portion of their portfolio pledged as collateral to secure debt and loans, aka their margin loans. So even small movements in the market because of how heavily over-leveraged Citadel is could end up bankrupting the entire fund. As these hedge funds take on more and more leverage, they take on more and more risk and get closer to going bankrupt and being liquidated. That's why, especially last year in 2022, we saw tons and tons of hedge funds down 50%, 75%, 90%, and even more. And especially as they've just become even more leveraged this year round, even smaller movements in the market will bankrupt more funds. And Biotech Moose has tweeted saying this is why we'll win, because retail knows the truth. Shorts are hoping to break us, but we understand the manipulation. Now again, this is just Boss Blunt's words, but he said once again it's vital to remember that nobody has woken up to sell AMC this morning. He said the downward pressure algorithm was specifically designed to mentally break retail investors into capitulation. He said the displayed share price is nothing more than a complete distortion of the abusive powers of the market makers. I've explained previously how Virtue keep the price down by using their infinite liquidity variabilities to fulfill those bid or buy orders. Even though retail investors aren't selling until $1,000 per share, give or take, you have buy orders at $8.50, and Virtue steps in to fill those buy orders so the price does not go up. Virtue say they do this for liquidity reasons. They say without us synthetically shorting shares that don't exist, the market would be all over the place. Volatility would be off the scale. So Virtue say we keep the volatility down, we keep the market moving, and we do this by selling illegal synthetic shares that don't exist. He said they steal buying pressure daily via payment for order flow and house it in non-reporting Citadel Connect and Virtue dark pools. And not only that, but they house it in shell companies like Troluce Capital. These entities are incorporated overseas where they don't need to report positions or report what kind of derivatives they're holding. They don't need to report how many shares they're borrowing or if those floats are even available to borrow from, because they're incorporated overseas. And he said then they sell fake shares directly to the lit exchange, forcing the price down further. And he said the unfathomable amount of FTDs is supporting evidence these hedge funds never owned the shares they sold us in attempts to bankrupt another company. And as I spoke about the other day, it seems Congress is getting more and more frustrated with Gary Gensler's lack of action. US House lawmakers from both parties sent letters to Gary Gensler demanding that the SEC stop discriminating against Bitcoin ETFs and ETPs and approve their listings immediately. Adam tweeted saying Gary Gensler got a demanding letter from Congress and then 30 minutes later hammered out an early denial. He said this guy is off the rails and thinks he's above both the courts and Congress and that Gary Gensler should be recalled. As I said the other day, I do think the courts or Congress will soon overpower and bypass the SEC and not only approve these Bitcoin ETFs and ETPs, but also destroy Citadel in the process. They're getting equally annoyed at the SEC for their action against Bitcoin ETFs and ETPs and their lack of action against manipulative short selling. And it won't be long until Gary Gensler is either bypassed or recalled. And finally, Dave Lauer tweeted saying this Goldman Sachs action is serious. Almost half of all of their blue sheet responses were flawed, 163 million trades. He said yet another books and records violation that kneecaps regulators' ability to surveil and enforce the rules. He said he believes if a firm can't keep accurate records, it shouldn't be in business, especially a firm as big as Goldman Sachs or Citadel, for example. These multi-billion-dollar hedge funds shouldn't be making simple mistakes like marking short sales as long buys, nor should they be making mistakes in blue sheet responses. But as I said in that video, it's likely these aren't just simple mistakes and administrative errors, they're all being performed on purpose. A multi-billion-dollar company doesn't make simple mistakes, everything is done on purpose. But simply because the SEC is bought and paid for by these hedge funds, they continue to get away with it. As I said, that is until Gary Gensler is either bypassed or recalled. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.